petrochemical engineering cannot be applied effectively in unrelated industries. The development follows the refinery's dismissal of several workers who reportedly joined the Petroleum and Natural Gas Senior Staff Association of Nigeria, a decision that earlier led to nationwide strike before government intervention restored calm. Many of the engineers said they are still waiting for formal communication regarding their redeployment and alleged that only foreign workers currently operate major refinery units. The Dangote Group, however, maintains that the affected workers were relieved of their duties for acts of sabotage, not for joining any union. The company officials explained that internal employment across different business units is a normal practice and that thousands of Nigerians continue to work at the refinery. Analysts said the situation highlights the importance of stronger labor management and the dialogue to safeguard industrial harmony and protect local workforce participation in major private sector projects. The Nigerian Electricity Regulatory Commission has revealed that Benin and Togo failed to remit more than half of their electricity payments for the second quarter of 2025, leaving a combined debt of $8.5 million owed to Nigeria. According to the Commission's latest quarterly reports, 6 international bilateral customers who received electricity from Nigeria and the power generation companies paid only $9.01 million out of a total invoice of $17.54 million issued by the market operator. The report identified Benin's society, Beninois Energy Electric, and Togo's company, Energy Electric, as among the biggest defaulters, while Niger's power utility, NICLEG, paid 68.8% of its $3.71 million invoice. Togo made no payment on its $4.31 million bill, and Benin only paid partially settled its obligation. The Commission warned that the shortfall in remittances continued to threaten the liquidity and operational stability of the Nigerian electricity supply industry. NERC noted that timely settlement of invoices remains essential to sustaining grid operations and maintaining regional energy cooperation. It added that the government is working with neighboring countries to improve payment compliance and strengthen bilateral electricity trade across West Africa. Now, China has tightened its export controls on rare earth materials and processing technology, extending restrictions to foreign defenses and semiconductor companies. The new policy announced by the Ministry of Commerce aims to safeguard China's technological advantage in critical mineral processing while regulating access to advanced components essential for artificial intelligence and chip manufacturing. The measures include limits on export in rare earth magnet and technologies, recycling equipment, and related assemblies, with additional rules taking effect from December the 1st. The move underscores Beijing's growing emphasis on securing control of strategic resources as global competition for technology supply chain intensifies. China currently accounts for over 90% of the world's processing rare earth, which are key to input for electric vehicles, wind turbines, aircraft systems, and advanced military applications. The latest curb are expected to influence international trade negotiations, particularly as major economies seek alternative sources for these critical materials. Following the announcement, shares of leading Chinese producers, China Northern Rare Earth Group and Shanghai Resources, surged by over 6%, reflecting expectations of tighter supply and higher market value. The industry analyst said the policy could accelerate global investment in rare earth exploration and recycling technologies, potentially reshaping the global supply chain for strategic materials. Now, the price for gold has soared past $4,000 per ounce, triggering a historic surge across other previous metals as investors seek refuge from rising global economic uncertainty. The rally, driven by concerns over unstable trade policies and fears of currency devaluation, has pushed silver, platinum, and palladium to multi-decade high. Analysts said the renewed appetite for hard asset marks a shift towards tangible stores of value amid worries that monetary instability could weaken major currencies. Gold's record-breaking climb has not only lifted investor confidence in billions, but also strengthened central bank reserves worldwide. Data from international financial institutions shows that the central banks now hold more value in gold than in United States Treasury bonds, a rare reversal that underscores global demand for diversification. Silver has its $49.57 per annum, and platinum the surge by more than 80%, and palladium continues its upward momentum driven by industrial and investment demand. Industry experts project that its continued volatility in currency and equity markets will sustain the momentum in previous metals. However, the caution that higher prices could soon encourage increased mining exploration potentially is the supply, according to reports. Now, thanks for watching. Do well to follow us on all our social media platforms. Coming up shortly is Just Africa. Do stay with us.
From Dubai to Lagos, Nigeria, and across the globe, SOUQ News TV is your #1 station focusing on business, economy, and development. With global digital reach, we connect Africa's pulse to the world stage. Welcome to SOUQ News Television, and here we go beyond the headlines. From breaking news, in-depth conversational programs, to market analysis and indices. From policies affecting growth to unique documentaries, from live event coverage to bespoke productions, we deliver content that connects you to the world. At SOUQ News Television, we provide news surrounding business, economy, and development, infomercials and jingles that stand out, short and long-form documentaries crafted to international standards, independent production spaces with full technical support, special coverage for individual and corporate events, a special form of documentaries through our prestige package, Immortals, where we tell your story the way you'd love it, and business support services tailored for small enterprises. SOUQ News TV, powered by FemWatch Limited, also home to the Isle 95.9 FM Lagos and Kasua 99.7 FM Kano, and Emirate News Television Abuja, together forming Africa's trusted media powerhouse. Storytelling, coverage, and connection that matters. SOUQ News TV, your home for business, economy, and development. Welcome to Cashcraft, where opportunities meet insight. Today, we're journeying into the field of prosperity where towering oil palms wave not just leaves, but the promise of wealth. From the humid groves of Edo to the rich red earth of Delta, a quiet boom is unfolding. Dough has been there for many years, but we could take advantage of this. This is one opportunity that holds the key to food security, foreign exchange savings, and thousands of jobs. Yes, we're talking about palm oil, Africa's red gold. But how do you tap into this opportunity? What does it take to build a business around palm oil, from plantation to profit? Let's break it down, step by step. 1. Understand the landscape. The first step is knowledge. Nigeria's oil palm production has risen by over 41% in the past decades, from 8.2 million metric tons in 2014 to 11.6 million in 2023, according to the Food and Agriculture Organization. Yet, with over 200 million mouths to feed and rising global demand, we are still importing palm oil to close the gap. That's your opportunity to become a local producer or processor. Step 2, choose your entry point. There are 3 main ways to enter into the palm oil value chain. Palm plantation farming. Cultivating your own palm trees is long-term but rewarding. Now you can look at processing. Buying palm fruits, popularly known as banga, I'm sure you know that, and converting it into oil with machines. That's another one. And trading. You can buy and sell finished oil in local or export markets. Each has different startup costs and time frames, so you must match your capital, patience, and passion. Before I go further, remember that this is not a professional guide, rather a wake-up call that there are opportunities everywhere. Now let's go to step 3. Get land or source supply. According to research, some initiatives like the Edo Oil Palm Development Program, EOPDP, and Delta State Delcom Scheme are making access to land to become easier. Findings shows that in Edo State, over 114,000 hectares have been allocated to both big and small investors, and over 65,000 hectares have already been accessed. In Delta, 130,000 hectares have been provided by communities under a cooperative model, with over 3,000 smallholders farmers already on board. Even if you can't own land, you can start small by sourcing fruit from cooperatives or leasing a small processing space. Of course you can. Now let's move to 4. Know the cost and time frame. It costs between $7,000 to $8,000 to cultivate 1 hectare of palm from nursery to maturity, but it takes about 3 to 4 years for the trees to start yielding. If you want quick returns, processing and trading may be better. You can buy a small-scale palm oil milling machines for 1.5 million to 3 million naira, or even less if you join a cooperative or lease. So let's go to step 5. Invest in knowledge and market access. Join farmer cooperatives like those in Delcom. They give access to training, markets, and funding. You can also link up with established companies like Presco and Okomo Oil. Yeah, I'm not marketing, but it's a way to tell you that, look, there are opportunities everywhere. All of these are listed on the Nigerian Stock Exchange. Step 6, think sustainability and value addition. Palm oil is not just for stew and soup. Yeah, think big. You can produce refined oil, cosmetics, biodiesel, and export-grade products. Investors are already joining this, and governments are backing it. You can do your research. There is also growing interest in eco-friendly farming and traceable supply chains. If you do it right, foreign buyers will come looking. Palm oil may have its controversies, but in Africa, especially in Nigeria, it is heritage, it is economy, it is future. The rise of Edo and Delta as palm oil giants is not just about hectares or harvest. It is about people creating jobs, reducing imports, and saving foreign exchange. If you are looking for a business with cheap roots and wide branches, palm oil may just be your calling. This has been Cashcraft, your guide to turning ideas into income. I am Grace Komalafe. Join us again next time, and remember, the ground beneath your feet might be your next big break. See you again.
Madagascar, the world's 4th largest island, stands as a geographical and ecological marvel of the southeastern coast of Africa. Isolated from the African mainland for over 80 million years, this island nation has evolved into a biological treasure trove found nowhere else on Earth. Over 90% of its wildlife is endemic, meaning it exists only in Madagascar, including the world-famous lemurs, baobab trees that look sculpted by myth, and an astonishing array of reptiles, insects, and plants. This extraordinary biodiversity has made Madagascar not only a focus of global scientific research, but also a symbol of nature's ability to evolve independently and richly. Beyond its natural wonders, Madagascar is home to a deeply diverse and culturally layered society. The Malagasy people trace their ancestry to both Southeast Asia and East Africa, making their culture a rare and fascinating fusion of traditions. This dual heritage is reflected in their language, rituals, architecture, and belief systems. The Malagasy language, derived from the Austronesian language family, is one of the few of its kind spoken on the African continent. This cultural hybridity also extends to cuisine, dance, and storytelling, blending African strength with Asian intricacy in daily life. Madagascar's history is equally distinctive. It developed powerful pre-colonial kingdoms, including the Merina Kingdom, which unified much of the island before French colonization in the late 19th century. Unlike many African countries, Madagascar experienced a relatively centralized monarchy before colonial rule. Since gaining independence from France in 1960, the country has navigated political instability, economic hardship, and natural disasters. Yet, it continues to strive toward democratic governance and sustainable development. Strategically located in the Indian Ocean, Madagascar is positioned as a crucial maritime node for trade, conservation, and regional diplomacy. Its economy, while heavily reliant on agriculture, fishing, and mining, is beginning to explore tourism as a sustainable development path. The island's unique biodiversity, combined with its warm hospitality and rich cultural heritage, makes it a compelling destination for ecotourists, adventurers, and scholars alike. In the face of deforestation, climate change, and poverty, Madagascar's story is one of resilience and irreplaceable natural wealth. It serves as both a warning and a wonder, reminding the world of what can be lost through neglect and what can be preserved through global cooperation and local stewardship. Madagascar is not merely another African country. It is an ecological arc, a cultural crossroads, and a national identity unlike any other on the continent. I'm Moyosore Adebiyi for SOUQ News TV.
Hello and welcome to Just Africa, the show where we explore the forces shaping the continent's progress and the challenges that often go unnoticed. Now, across Africa, millions of people remain outside the formal financial system, unable to access credit, savings, insurance, or investment opportunities. Yet experts say financial inclusion could be the missing link between poverty and prosperity. So we ask, how do we move beyond slogans to real solutions that give every African, the farmer in Kano to the entrepreneur in Kigali, the financial tools to grow, build, and thrive? Today's topic is financial inclusion as a catalyst for growth. To unpack this, we will also be joined by a professor of development economics and development finance, whose research focuses on inclusive growth and financial systems in emerging economy. This is Just Africa, reaching you live from our studios in Lagos. I am Olumide Shokoya. I have my co-anchor, Onyepriya Krumale. How are you doing?
I'm okay. Hello, Olumide. Hello, Africa. Hello, world. Financial inclusion, for me, it's beginning to sound like a broken record. But I don't really know if we've taken huge advantage of it. But the thing is, one reason why financial inclusion, or why we have grown, or why I would say Africa has made a very, very large form of impact. You know, if we look at the year 2000, 2001, 2003, come to 2007, 2010, moving out to 2015, and coming to 2020, all those times, the government of Nigeria have been looking at increasing or trying to mop up cash away from the system. And one of the reasons why they were able to, achieve, no matter how meager or insignificant gain they have achieved, they were able to do that through the advent of telecommunication. Yes. And because now that they've been able to achieve some margin of success through telecommunication, the financial inclusion now beckons, because people at the rural areas need to be, captured.
Yes.
And the only way they can be captured, there is no, most of the rural areas are completely lack of telecommunication infrastructure. And if they don't have telecommunication infrastructure, however, there are some places that telecommunication had penetrated to, and most Nigerians seem to be possessing, no matter how little, even if it's not an Android phone, they have a button phone. And for the farmer in the rural area, the button phone, most of the time does not really have to walk around with cash. So if telecommunication provided a platform, and those people who didn't have bank accounts before, just by pressing some form of code on their phones, they have access, they have accounts, they just develop accounts, though they will need to go to the conventional banking platforms or to the banking offices to finalize their registration process. But at that initial stage, they have accounts, they can pay into the account, they can receive cash deposit into that account, they can spend cash from that account, they can pay suppliers, buy stock their shops, and they can receive payment from their customers. So this in itself is good, but because of the large population of Africa, 1.4 billion people, when you look at it, a report has it about 55% of Africans seem to have bank accounts, and I consider that quite small, even with the level of technology that we have currently available.
Yes.
And the reason why we've been able to achieve the marginal success, you have the mobile apps, the mobile platforms through which we've been able to achieve that success, but it comes at its own toll too, because while we're using the normal conventional platforms, don't carry lots of money around, and how thievery and all those unscrupulous activities used to take place. Those ones too, they've modernized, they've changed their faces to, now those are kind of activities are perpetrated
online,
digitally and online. So whilst we're preparing for the good and for the good inventions coming up, we are also preparing for the negative aspect in order for us to nip in the bud some of the negativities that might surface as a result of that. But I can say that the advantage has been quite monumental, more than the disadvantage that we're experiencing.
Yes, quite right. So today we will dive into a powerful concept, financial inclusion, for millions of Africans. Access to a basic financial services like a bank account, a loan, insurance. It remains a distant dream, but imagine the transformative power if every entrepreneur, every farmer, every household could participate fully in the formal economy. We are asking how truly broad and equitable financial inclusion unlock Africa's competitive edge, empower its citizens, and accelerate sustainable growth. We'll find out after this break. It's Just Africa. Don't go nowhere. Welcome back to Just Africa. Today's topic is financial inclusion as a catalyst for growth. Joining us to unpack this robust topic is Professor Adewale Aregbesola, a professor of development economics and development finance. So glad to have you, Professor.
Thank you so very much, sir. Thank you to your viewers. It's my pleasure to be on your show. Thank you.
All right, so let's start from the basic, but with depth. When we talk about financial inclusion, what exactly do we mean, and why does it truly matter or really matter so much to Africa's growth story?
Well, to put it simply, financial inclusion means leaving no one behind in the financial sector. Simply, that's what it means. It means that we should have as many as possible part of population enlisted in the formal financial markets agencies. I mean, people should participate. People should benefit from every advantages that financial markets can offer, and reap the benefit of developmental economies that is aided by financial development.
Right. So, how strong is the link between access to finance and broader economic transformation? Can we truly grow inclusively without it?
Well, it's just saying which one comes first. Is it the egg or chicken? There is no way you can have any meaningful development without financial market development. And there's no way you can have financial inclusion without financial market development. So, financial market develops through financial inclusion, and people also benefit from financial market development through inclusion. So we can say that financial inclusion drives growth, it drives financial market development, and also, the causation is is a mutual, that is a by causation. That is, the direction is both ways. So financial inclusion specifically is the engine room of every economy, in that no economy would develop meaningfully when people that should drive its efficiency and liquidity are excluded from participation. Take for an instance, the depth of money in circulation is dependent on how fluid the market itself is. I don't just mean the money supply, I mean also the turnover of that money in circulation. How efficiently and effectively do people transact within the system? Because if there is money in circulation and it's not moving from one hand to the other, it is not exchanging hand, then there is not going to be any economic activity, and there's not going to be economic activity without exchanges of finances or financial resources. So apparently, we cannot achieve economic transformation without meaningful financial liquidity. And the financial liquidity should be driven ideally through people participation. Women must participate in economic transformation by by um, by improving the transactional aspect of economy. There is if in an economy, if the activities, if economic activities are limited in a country, definitely you will not expect the economy to grow, not to talk of development. So it is the level and the depth of economic activities in a country that determines how rapid or slow a country's economy will develop and grow. Take for an instance, when we talk about economic transformation, we speak about, we use GDP as the major indicator of economic growth. However, so very many scholars have proven that this is inadequate. It's inadequate because we could have very high GDP figures and the economy will still not develop. Essentially, if the depth of economic activity doesn't reach the grassroots. So if people are excluded from the financial market um, through financial exclusion, which is the opposite of financial inclusion, then it will inadvertently affect the macroeconomic fundamentals and the level of activities that goes on within the economic system itself.
Thank you very much.
Thank you. Thank you very much, Professor Adewale. Now, whilst you were responding to my colleague's question, you referenced financial development, and it says that it's the process of improving our financial institutions, markets, infrastructure, and regulation. From 1999 or from the early 2000s to now, we've seen a gradual movement in the capacity of our financial institutions, in the capacity of the financial infrastructure. We've seen our nation and the continent of Africa demonstrate to a level, the kind of capacity they have, to the extent that they started preaching financial inclusion. What do you think gave birth to this growth?
Well, I must say that it was driven by African countries being intentional about the specific macroeconomic trajectory that they want to see in their countries. That is one. Second, more pertinently, you see, the series of interventions we've seen across countries, which were driven by policy reforms, uh, I couldn't say that they were externally or exogenously imposed. They weren't. They were homegrown. But then we should be mindful of the fact that Africa is not in isolation of global financial system. There is something we call macroeconomic contagion and financial contagion, in that one country really depends so much on the other country, and whatever happens in one country, will affect what happens in the other country. Take for an instance, when there was a mortgage financial crisis in the US in 2007, 2008, because of the contagion effect of the financial market, it affected almost every country in the world, except for some that are very strong macroeconomic fundamentals and very, very strong regulatory environment in their financial market. So there is no way we can discuss financial maturity and financial development without looking at the infrastructure that really supports it. And one of the critical infrastructure that supports financial development is the regulatory environment. The regulatory environment must be very, very strong. It must be dynamic. It doesn't have to be static. But more importantly, it has to be strategic. Um, of course, let's look at Nigeria as an example. The bank recapitalization exercises that has gone on for quite a number of times, in my own assessment, has really not yielded the desired effect. And I think the major reason is we look more into the formalization of a system rather than including the people that really benefit or use these systems. So we put the cart before the horse, and some of the interventions that we have doesn't really speak much to the consumers of these financial products. So part of this infrastructure that I would like to see happening more in Africa is technology. If we look at it, technology penetration in Africa remains about 38%, far, far below the global average, which is about 68%. That is very concerning. Most of the technological infrastructure that we use today across Africa are still foreign. We import them from advanced economies. Of course, it's not bad to learn from others. It's not. But then I think Africa should have matured to the point that we can start creating our own infrastructure. We have almost everything it takes to do this. We have the good brains. We have all the resources. So I think it is important that we really look at these dynamics to improve our market efficiency to the benefit of the people.
Okay, thank you very much. So I like that the fact that you have to reference technology, but the disadvantage there is that the worrying statistics and data that you just quoted is that Africa continental-wise, we are just 38% compared to what is expected globally, like the 68%. But what is responsible for the kind of progress Nigeria in the continent of Africa being referenced as the country with one of the fastest technology and financial space that handles transactions in a split of a few seconds, where even those from the Western clients seem to acknowledge that. What do you think we did differently, and why is it not replicated across other African countries?
You see, when we cite those kind of statistics, personally, I am very pessimistic about it. Why do I say so? Having a cell phone doesn't mean that you connected to technology. So availability of technology is one thing, accessibility is another thing. So if we look at it more pertinently, we'll see that technology has been growing very rapidly in Nigeria. But specifically, what has been growing? Is it the technological adoption that has been growing or access to cell phone? The cost of data in Africa remains one of the highest in the whole world. Data is very expensive. Even if you are able to buy data, in some cases, you don't even have power to recharge your phone. You don't even have, you get to some ATMs, there is no power to dispense cash. And we use a lot of POS in Nigeria, which personally, I really don't think it will aid our financial inclusion trajectory. Because I mean, people should have power over their own finances. So I'm a proponent of a mobile, phone banking technology, which will in a way replace or augment the use of a POS, which I really don't subscribe to. Anyway, that is just by the way. The most important thing here is this: technology. In a lot of places in Africa, we do not have access to technology. Remember, Africa is dominated, larger portion of Africa is dominated by rural areas, not urban areas. Of course, there is increased urbanization, but the fact still remains that most of our population across Africa live in the rural area, where there's no power, where there's no where there's no internet receivers. So how can we then claim that we are so rapidly developing technologically? I think it is an illusion, especially if we look at, these statistics, when we quote them, we have to be careful. To say that more Nigerians now are now connected to, 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 to telecommunication gadgets and interface is true. As compared to the early 1990s and 2000s, before MTN penetrated Nigeria and some other countries in Africa. Yes, it's true. We now have more access to technology, but how many people can really afford this technology? I have accessibility. Accessibility is still very low. Um, you know, Look at it from this angle. How many less privileged people have access to the internet 5 hours in a day? What percentage of the total population? Nigeria is more than 200 million people. Do we have a quarter of people in our country having unrestricted access to the internet for at least 5 hours in a day? Then if they don't, how do we expect them to bank effectively and efficiently using mobile banking or fintech? I mean, these are some of the problems. But if you look at a country like Kenya, mobile penetration in Kenya is very huge. So also is internet. And the cost of internet in Kenya is so low, very affordable to people. Probably that explains why M-Pesa, which is a fintech, is so very popular in Kenya. Most of transactions are conducted, even at markets, even at informal markets. Most of transactions are conducted using M-Pesa, which is a fintech. So until we get to that level across Africa, essentially in the large economies like Nigeria, I don't think the profile is going to change meaningfully. And one of the ways to do that is to invest heavily in technology, essentially internet, penetration. I mean, Nigeria is in a vantage position to provide its own, platforms, internet platforms. I mean, like South Africa does a lot of that. The same thing in Egypt, the same thing in Ethiopia, and to a very, very large extent, Kenya. There are some, and Rwanda is one of the leading countries in that regard these days. So, I mean, we have a lot of success factors and success stories in Africa, but but the success stories are not as convincing and are not as compelling as they should have been, probably because of hegemonic neglect and maybe a lot of prioritization in some of those critical areas.
All right, thank you very much, Professor Aregbeshola. Now, mobile money and fintech have transformed how people save and spend, from Kenya's M-Pesa to Nigeria's fintech startup. So in your own view, how revolutionary has digital finance been reducing inequality, and what risk or blind spots should we be aware of?
Well, I quite agree that it has helped us so much. I mean, no matter how pessimistic we are, we have to accept the fact that it has really transformed how we do business in Africa. It has helped to reduce some of the indigenous, weaknesses that we have in our economic systems, like a theft and a robbery and things like that. Yeah, and fraud that relates to cash theft and cash, frauds and so many other things. Yes. Um, However, we still have a very long way to go. In spite of all these success stories, and I think one of the drivers of speedy internet penetration and depth will be heavy investment in infrastructure. Um, in this part of the world, we don't even talk about blockchain technology. We don't talk about AI embedded banking or financial instruments and platforms. We're still so very far away from all those. So, and I think before we can start thinking or talking about all those, we have to get the basics right. And some of the basics is, can we really promote banking among our people? Because a continent that is unable to generate internal savings will end up borrowing from outside its own comfort zone. I mean, there are some countries in Africa that only borrow our money in locally denominated currencies. That is, most of their debts are internal debt, they are domestic debt. They don't go outside to borrow money. And that is efficient resource mobilization within the system itself. And we can do that by promoting savings within Africa. And you can only save if you have total control, absolute control over your finances. So giving power back to the people or their finances rather than financial institutions that determines at what rate do you withdraw money, at what rate do you bank. The transaction cost, banking transaction cost in Africa is so high. It's one of the highest in the world. I mean, these are some of the little things that we can address. And of course, people will also be motivated to save if there is incentive for saving. Government across Africa has to be intentional about mobilizing and mapping internal resources to galvanize economic development and growth. I mean, the people we are borrowing money from, we borrow from them because they have savings. So how about we also embark intentionally and through policy intervention on such drives? So ensuring that we leave no one behind in resource mobilization and financial market efficiency through financial market depth and inclusion will help us a lot. I really think it has so much to do with policy intervention, and we have to be intentional and come up with policies that really speaks to improving financial liquidity within the system.
All right, so African economies are still largely informal, with millions earning daily income outside traditional systems. So let's look at the solution. How can we design financial systems that serve this informal majority, instead of just excluding them? And second question, what role can microfinance, cooperatives, or community savings play in formalizing prosperity?
Yeah, thank you very much. Yeah, you see, let me answer your second question first. The cooperative societies and other informal systems, um, they are just like melting pots for the informal sector that you talk about. That most of our markets, most of our economic activities take place in the informal sector. That is true. But then, if you look at it, even this informal sector generates resources. A lot of buy and selling is taking place there. Where do they keep their money? Do we make it easy for them to keep their money in the bank or through a platform immediately when they have this cash? I mean, how many ATMs do we have? And how accessible are these ATMs to market women and men? And can they really save their money through ATMs, or they have to go and queue in the bank? Queuing in the bank alone is very discouraging for people, especially for market men and women. I mean, they have to spend hours of productive time queuing up in the bank just to deposit their own hard-earned income. That is frustrating. But then if we have so many collection centers, I mean ATMs that can receive deposits directly into people's account, and they can now transact on their phone with the money that they have in their bank account, I mean, economic activities will improve drastically, and interest and the confidence in the financial market will also improve. So I think these are some of the things that we have to look at. Of course, it is not only Africa that has a lot of participants in informal sector. It's global. The reality is most of the global population live in rural areas. And these rural areas do not have resources that urban areas have. But they make things work in more advanced economies. What can we borrow from those economies? What can we borrow from Singapore? What can we borrow from Taiwan? What can we borrow from South Korea? What can we borrow from Sweden? I mean, these are some of the leading examples in very, efficient financial markets. They have very efficient financial markets. So what can we really borrow from those systems to ensure that no one is left behind in the financial market development and activities? All market agents, we all do the same thing. Be you in the formal or in informal market, we all do the same thing. We transact. So how about we take transaction to the people? In the markets, in the major markets, can't we have, secure platforms for people to save their money and to make it easy for them to use their cell phone like in person to transact? And that is where the microfinance comes in. Microfinance plays a very, very big role between the big banks and the end users. And but then everything still depends on the available infrastructure. Microfinance they do not have the resources to provide those platforms and those platforms. They don't, because they're very expensive. But then the big banks will have to augment those activities and augment and support the activities of microfinance, because you cannot have big banks everywhere. But you can have microfinance everywhere, and you can have cooperatives everywhere. In how many cooperative secretariats do we have ATMs? Do we have mini branches? I mean, we don't have them. So, I mean, these are some of the things that we should be intentional about. Of course, financial security is also very important. I agree fully. But then, can't we make it possible by ensuring that the platforms that we created in those informal areas are well secured? So I think the kind of security that we provide for big banks can also be extended to microfinance and other smallhold financial, financial participants as well, market participants as well.
Great. Thank you very much, Prof. Now, I like what you said when you referenced when you referenced the capitalization, the banking capitalization that is currently going on, that is going. The deadline has been stated for the 2026. But when you make comparison between Africa and other clients, most especially in Europe, you reference digital assets. So I would like to draw your attention to some of the government policies that took place in Nigeria and that with time will be seen in other African countries as well, which have taken effect. The Securities and Exchange Commission in Nigeria recently set new rules for digital assets, which became effective on June 30th, 2025, following the Investment and Securities Act 2007. The amendment rules and the Investment and Securities Act, placing the burden on issuers to provide or otherwise to provide access and require registration for entities. Now, do remember that previously in Nigeria, the digital asset platforms were suspended by the government during that period of time because there were much criticism that both politicians and others who are involved in some nefarious activities use it as a medium to siphon money out of the country. But regulation and the Securities Exchange Commission in their recent policy, they've set guidelines on how this asset should be, and this has expanded the scope of financial inclusion. Do you think we have done enough, or do you think we need to review same process?
Well, it all depends on what the government of the country intends to achieve, because everything that happens in a country is underpinned by strong policies. If the government wants to promote financial inclusion, they will have to make policies that promote financial inclusion. If they want more people to start saving, they will have to make policies that will engineer and motivate people to save. So, of course, there is no technology in the world today that is no impervious to opportunistic activities. There's no technology that is error-proof. I mean, we expect all those, but then that is where the regulators come in. I mean, the regulators must be a step ahead of people that try to penetrate the system. So the regulators have to be more strategic, have to be more future oriented. They have to be strategic. They don't have to be reactive. That is, they don't just react when things happen. They must foresee things happen. I mean, this is what I expect should happen. So of course, can I say this, that there is no system in the world that is perfect. What everyone tries to do is to improve on daily basis and continuously. We do not design a system and say this system has been designed and that is it. No, we keep on improving the system. We should have strategic thinkers that will foresee some of the possible pitfalls of the system that we have designed, and that will work on continuous basis to safeguard and protect those systems and protect their efficiency and protect their integrity. So there are some people who are using the existing systems and infrastructure to behave opportunistically. It's not new and it's not going to stop. It continues. But then the question is, what do we do as a country to safeguard it? I mean, so in so many, look, as I said earlier, Nigeria and African countries are not isolated from the rest of the world. So if anything happens in Africa, there is tendency that it might have happened somewhere else, and they must have done something about it. And that is
Okay.
where, according to African Union, peer review and peer learning is very important. I mean, we as Africans, we have to learn from one another. Look at systems that work so well in places and try to emulate it. If M-Pesa works so well in Kenya, what stops us from learning from Kenyans? If the technological advancement of Rwanda works well for them, what stops us from learning from them? I mean, South Africa has one of the most matured and efficient financial markets in the world. Why can't we learn from them and see how they do things? So we don't have to be reactive. We don't have to shut down a whole financial instrument just because there was some opportunistic behavior. No, we don't have to do that.
Okay,
I mean, that
Prof,
is panic
permit me to
response.
come in here. Prof, sorry, let me butt in here. Two things. I want to call your attention to two things. Yes, M-Pesa is effective in Kenya, but when you compare the population of Kenya to some other African countries, they are just a fraction. If in case in point, Nigeria. And some of the, if M-Pesa has worked that way over in Kenya, there are some other platforms in Nigeria that seem to be quite very, very much effective and covers a larger scope. So, and the platforms seem to be diverse in Nigeria more than in Kenya. And of course, they should learn from each other. But what is the missing link? That's number one. Number two is this. The former president of the African Development Bank, who is a Nigerian, Akiumi, was saying that Africa would do a lot better if they trade amongst themselves. But there's been an opposition where just the way you have Euro governing the European Union financial system, where you can trade and buy, carry out commercial activities within Europe using the euro. In Africa, we have something of that significance which is lacking, and we are resorting to the dollar. How can we break past this imbroglio?
Sir, I quite agree with you. Population is one thing, but I think the population will be rendered uh, unimportant if we have a strong platforms. A lot of people look at United States as a perfect system. It's not. All they do is they keep on improving. A lot of people look at India as an underdeveloped country. It's not. It's not true. India has recorded one of the most advanced macroeconomic development over the past few years. So, of course, we have very good systems that work in Nigeria, but the fact still remains that a lot of our people are excluded from the financial market. So the question is, what is the missing link? What can we do differently? And my point is this: the mobile phone that we have in our hands is a very powerful tool. Is it possible using the mobile phone to transact more very effectively among ourselves, even in the informal market? That would take away the use of cash to a very large extent. If you go to the market and you want to buy potatoes and the person just asks you, what is your ID number or something, a specific financial market, instrument number, and you give it to them and they transfer the money to you immediately. I mean, then nobody asks for cash. It is done in some African countries. So, and the same thing can be done. So, I mean, we have a lot of things that work in Nigeria. We have a lot of things that work in South Africa. We have a lot of things that work in Egypt. But the fact still remains that these systems are not as efficient as they should be. So we have to go back to the drawing table and look at what each and everyone is doing right and benefit from that. What Dr. Additional said is correct. Trade between Africa and within African continents is less than 15% as of today. African countries do not trade with one another. And we have come up with the Africa Continental Free Trade Agreement that are still not, started function. FMS Bank recently came up and said they want to create a financial instrument that will enable all African countries to trade more effectively with one another using that, financial medium. I mean, that is a good development. But the thing is this, as some African countries are promoting this, some African countries are fighting against it. So, can we then, is it possible then that the leading African economies should take lead? As I said, and as I keep saying, everything depends on intention. We have to be intentional about driving these processes. And there is no way we can drive any process if we do not have the platform that supports our trajectory. So investing heavily in infrastructure is gonna work so well for us. And let me say this: most of the fintech interventions across Africa today were developed by Nigerians. But then Nigeria still doesn't use a lot of them. So what is the missing link? And trust me honestly, I think the cost of data is high. I think that is one of the things that we have to look at. And second, the penetration. We have to ensure that there is mobile connectivity and internet connectivity in as many rural areas as possible, so that people will find it easy to transact and to use the available financial market technologies that are available.
All right, thank you. Finally, Professor, from a development finance perspective, what are the most effective policy levers that governments can pull, to accelerate financial inclusion without creating new vulnerabilities or encouraging reckless lending?
You see, I think it is important that every government across Africa should lead by example. Reckless lending and reckless borrowing is never in anybody's interest. Be you a person or a country or a local government or a provincial government or anything. You only borrow as the last resort. Most of the advanced economies, what they do mostly is they mobilize resources internally. And it's the same thing we can do. No money is too small to save. I mean, with little income, if it becomes an habit among us that saving is more important than spending, we will see that there is something I read some time ago about a specific country that I will not mention. In that country, they say that they save their money and only spend what is left. But in most African countries, we spend our money and only save what is left, and that is an attitude. So that is not a saving attitude. So to promote that, the government will have to create policies and enabling environment that will promote savings. The financial market is not going to be liquid and it's not going to develop if we do not promote, internal savings. Saving is very important, and reckless application of resources should also be curbed. It's all about the intention of the government. A lot of things can be done if the government is so intentional about changing the trajectory, and it's across Africa. And when we talk about Africa, please permit me to say this: when we speak about Africa, don't let us paint all African countries with the same brush. All the 54 African countries are different in size, in economy, even in structure. So what works in one country will not work in the other. The experience of one country will differ from the experience of others. However, there is a common ground, and the common ground is, what do we want as a country? We have to be intentional about building the continent that we want to see. We have to be intentional about building the country that we want to see. To drive financial inclusion, to ensure that no one is left behind, we must create an equitable system and platforms that will promote, and bring everyone together in an equitable manner and will safeguard everybody's interest. It's all about interest. I mean, if I develop good trust and good trust in the financial system, I mean, I will deal more with the financial system. But the apathy is already there that the financial system is not they do not have good integrity, and they are not, in most cases, very reliable. They frustrate you because you have to queue for a long hours to save your money. They frustrate you whenever you want to go back to go and collect the money that you saved there, they charge you for it. You know, there are so many things that we have to review. I mean, interest rates in Nigeria is in double digits. In some of the advanced economy, is like 1% or 2%. What is the difference? The difference is internal mobilization of resources. And it's that simple. It's not rocket science. It can be done.
Thank you very much, Professor Adewale Aregbesola, for your insights, and thank you for joining us on Just Africa.
Thank you so very much, sir, and thank you to all your viewers. Thank you.
You're welcome. We have been speaking with Professor Adewale Aregbesola, a professor of development economics and development finance on financial inclusion as a catalyst for growth. We'll go on a short break now, and when we come back, we'll continue with the second segment of the program. It's Just Africa. Stay with us.
Cashew nuts, ranked among Ivory Coast top cash crops, play a crucial role in the country's economy, generating substantial revenue and supporting livelihoods across the country. As the world's leading exporter of raw cashew nuts, Ivory Coast contributes an estimated $800 million annually to its economy and also serves as a vital source of income for over 410,000 families, particularly in rural areas where few other opportunities exist. Cashew trees flourish in Ivory Coast northern regions, including Bondukau and Savannah, known for its high-quality nuts and extensive plantations, just as Worondogu and Bagwe in the north central and northwest are also emerging as key producers. These regions not only drive Ivory Coast cashew production, but also support local livelihoods and economic growth. However, the country with over 29 million citizens is yet to fully realize the potential of its cashew industry. Despite being the top producer, the country processes only 7% of its cashew domestically, resulting in lost opportunities for value addition and job creation. Specifically, a recent data reveals that only 22% of the country's cashew nut output was processed domestically in 2023, even as the volatility of global cashew prices poses risks to farmers' income and overall economic stability. Concerns also arise regarding labor practices in some cashew farms and the environmental impact of deforestation for new plantations. To address these challenges and maximize the benefit of its cashew industry, Ivory Coast must focus on key strategies moving forward. These include investing in local processing facilities to boost job creation, export value, and farmers' incomes. Furthermore, the Ivorian government body overseeing the cashew sector, ARECA, must promote fair trade practices and ethical sourcing to ensure better prices for farmers and improve working conditions. Sustainable farming practices will also help to protect the environment and ensure long-term cashew production. According to a recommendation made at a workshop organized by the World Bank, tax exemptions and access to credit facilities will help to tackle some of these challenges. Furthermore, the private sector can also invest in research to develop high-yielding cashew varieties, improve processing techniques, explore new cashew products, as well as develop and implement digital platforms that connect farmers to market in order to facilitate financial transactions. Organizations like the Africa Cashew Initiative (ACI) must also assist in data compilation in the value chain at macro, meso, and micro level. By addressing this and harnessing its cashew potential, the country can further enhance its economy and build a more sustainable future for its citizens. Israel Adeyemi reporting for SOUQ News.
Cocoa has more than tripled in costs over the past year and is up 129% this year. The rise in cocoa prices is likely due to a global cocoa shortage. Climate change-induced drought has ravaged crops in West Africa, which contributes around 80% of the world's cocoa output. According to the International Cocoa Association, global cocoa supply will decline by almost 11% over the 2023-24 season. The world produces nearly 6 million tons of cocoa beans each year, and consumers may begin to feel the impact of this shortage by the end of this year or early next year. Nigeria's cocoa earnings in the first quarter of this year surged by 279%. Driven by a sharp increase in its prices in the international market. Data from the National Bureau of Statistics (NBS) indicates that in the first 3 months of the year, the value of cocoa exports totaled 408.66 billion naira. This represents an increase of 279% from the 179.5 billion naira recorded in the first 3 months of 2023. When compared to the preceding quarter, total cocoa exports increased by 138% from 117.29 billion naira recorded in the preceding quarter. Despite the significant depreciation of the naira in the first quarter of the year, the dollar value of cocoa exports saw a significant increase both year on year and quarter on quarter. There was a 63.3% increase in the dollar value of Nigeria's exports between the fourth quarter of 2023 and the first quarter of 2024. Using the closing rate of the dollar to the naira at the end of December 2023, cocoa exports for the period stood at 100.
Augmented reality (AR) is a technology that merges computer-generated images with the user's real-world view, creating a composite experience. This interactive experience integrates various sensory modalities, such as things you can see, hear, and even feel, making the experience interactive and immersive. In recent years, the emergence of this transformative technology has seamlessly integrated digital and physical realms. This groundbreaking innovation relies on specialized hardware like smartphones and smart glasses equipped with cameras and sensors, AR software, and Apple's AR Kit and Google's AR Core. Then creates immersive experiences by overlaying virtual content onto the user's real-world environment. AR software such as Apple's AR Kit and Google's AR Core then creates immersive experiences by overlaying virtual content onto the user's real-world environment. AR's applications span diverse industries from gaming to education, healthcare, retail, and manufacturing. In education, AR enhances learning through interactive and dynamic experiences, while in healthcare, it aids surgical planning and medical training. Retail experiences are transformed as AR enables customers to virtually try on products and visualize furniture in their homes. Despite its potential, AR faces challenges such as technical advancements and user privacy concerns. Overcoming these hurdles will unlock even more seamless and immersive AR experiences, making it an integral part of our daily lives. As technology progresses, the horizon for AR broadens, promising a future where our interactions with the world are richer and more interconnected. Augmented reality is not just a trend, it's a revolution shaping the way we live, learn, and work. Goma Fortune, SOUQ News.
Welcome back to Just Africa, where we explore ideas, innovations, and of course, investment shaping our continent's future. Now, from mobile banking to e-learning to e-governance, Africa's digital economy is fast growing, yet the backbone that supports it, our telecommunication infrastructure, remains fragile and uneven. Millions are still struggling with poor connectivity, unreliable internet, and high data cost. Challenges that hold back education, business, and innovation. Today we ask, what will it take to build a connected Africa, one that is digitally secure, inclusive, and globally competitive? Now, on this segment, we will look at strengthening Africa's telecommunications infrastructure. Joining us to unpack this robust topic is Orji John Nkweri, Acting Head of Transmission Network, Entel. So glad to have you on Just Africa today.
Thank you, sir.
You're welcome. Now, let me ask the first question. In your opinion, how would you describe Africa's telecommunication? Are we catching up or are we lacking global standards?
Yeah, so thank you for that question. When you look at Africa in terms of telecommunication infrastructural development, we are still developing. We are doing much currently because when you look at the submarine fiber network in Africa as a continent, you will see that we are doing much.
Yes.
If you look at the African geographical map, you see that around the coastal region of Africa, we have, submarine fiber optics, presence.
Yeah.
And we also have a lot of penetrations, especially in the coastal regions. Of course, we have a number of countries, but if you look at it critically, we have some major African countries that we take as fiber optic hubs, just like Kenya, Nigeria, South Africa, Djibouti, and Egypt. So when you look at these areas, you see that we have more opportunities in this area. We also have some other African countries, like we have Cameroon, we have Togo, we have Ghana, where we have maybe presence of one or two submarine fiber optic.
Yes.
And one thing you should understand is that the submarine optic network is like an extensive fiber network that gives us global access to, digital data, internet access, you understand, and the rest. And the fact is that Africa is growing in terms of digital economy. Africa is growing in terms of internet capacity. Yet we still have few areas, we still have some gap, you understand, that we still need to, cover up. When you leave the coastal regions, we have what we call the landlocks, countries that do not have these, let me say,
Access
coastal
to
boundaries,
water.
access to waters.
Yes.
So there is still a bit of work to be done in these areas. Let me take Lagos as a case study. In Lagos, we have the WASC, we have ACE, we have Equiano cables, we have SAT3 cables, we have Glo1. So all these cables are, concentrated in Lagos. And that's why when you come to Nigeria, Lagos State is like the key area because a lot of ISPs are here, because the submarine cables are here. So it gives ISPs a lot of opportunities, you understand, in terms of network planning, in terms of network resilience, in terms of network, reliability, and also it gives the users opportunity to have affordable internet services, unlike when you compare to other countries where you have maybe just submarine, cable stations, or where you don't even have at all. So you cannot compare the cost of internet service like in Nigeria in those places. Yeah, one, because the availability is not there all the time. the cost and the maintenance of all those cables are also on the high side. And because of this, internet access in those areas are not affordable, unlike Lagos. If you leave Lagos and move to Ibadan, you see that the scenario will not be the same. Here now, Lagos is saturated with both, submarine and metro fibers. Because we have the presence of submarine, you have a lot of investors here. Everybody wants to harness that opportunity. Yes. You understand, to boost up his business, to make his own impact in our digital economy, yes, internet capacity, and all those stuff. But when you look at Ibadan, just like I'm using Nigeria as a case study, if you look at opportunity in Ibadan and Lagos, they are not the same. So investors need to think twice before investing on intercity fibers. Oh, if I should build fiber from Lagos to Ibadan, what opportunity do I stand to get? You understand? So a lot of factors, a lot of consideration have to come into play when you want to move, the service from that point of those submarine landing stations to the terrestrial locations. Okay. So you see that there's a bit of cost. And of course, it's not every investor that is ready to take that risk.
All right. Now, you mentioned something about gaps. Yeah, of course, we have about 60% usage gap, despite mobile coverage. What factors do you think contributes to this disparity, and how can they actually be truly addressed?
So just like I said, first is infrastructure availability. Like I said before, in the coastal regions, yes, you have a lot of internet facilities, you have a lot of communication facilities, you have the presence of so many investors in those locations. Yes. When you begin to move to the terrestrials, let me also use Nigeria as an example. I mentioned Ibadan. If you move from Ibadan to Osun State, you see, as you are moving away from Lagos, you are attracting more cost. You understand? So because the infrastructure is not there, the internet experience here and there, they are not the same. So there is a gap. So because of that, because of affordability and digital opportunities are not the same in those areas. And some of the things that we can do as well to cover up this gap, yes, actually government need to come in. You understand? Government need to come in because this is something that will require both private and public collaborations. You understand? So if you look at Nigeria, for examples, we do a lot of civil work, roads, constructions and rehabilitations. But if you have this infrastructural build in mind, governments ought to incorporate infrastructural build. Yes. As they are doing intercity road, they should incorporate all those infrastructures. Because when these infrastructures are there, then it will be easier for all these internet players, you understand, to just come in and use these infrastructures to extend the network to all these areas where we have, less internet coverage. And by doing so, there will be a lot of opportunities, a lot of digital economical boost, you understand, to the people. So because here, government is not actually acting in that direction. That's one of the reasons why we have the gap. Another reason is the issue of insecurity. If you look at Africa in general, so many countries are volatile when it comes to insecurity. And the truth is, no investor is willing to invest his money where the environment is volatile, because nobody runs business to make loss. So if the security and protection of that infrastructure is not there, it will be difficult for investors to come in. So another factor is what? Insecurity. So it's actually impacting on what? Telecom infrastructure. And also, if vandalism also has its own part to play. You understand? Just like in Lagos, the players here experience a lot of, vandalism of their telecom infrastructure. Even when we have the presence of, security, people all over the place, yet these things are happening. So when you now look at going into the remote areas where you even have less security presence, you see that the rate of vandalism is increasing on a daily basis. Because if you look at also the economy also has a part to play in all this when it comes to vandalism of telecom infrastructure. Not only telecom infrastructure, even other public facilities. You will see a scavenger that is hungry because he wants to eat. He might destroy a facility that worth millions without thinking of what is going to be the impact. He just wants to satisfy that hunger at that point in time. Like some of the issues we experience in Lagos. In fact, you see these guys coming to cut your cable to collect the plastic closure that we use to house the fiber. Out there, they might sell it like 3,000, 4,000 without knowing the huge impact. You understand? They are causing to the what? To the ISP providers. So the state of economy also has its own part. You understand, to play, because when vandalism continues to increase like this, the ISPs will be skeptical, bringing out money to invest.
Okay. Yeah, thank you very much. Now, I like the fact that you had to make some references to like states in Lagos State, for instance, in Nigeria that have access or that are coastal states. And let me just name a few of them because it looks like they're all in the southern part of the country. Akwa Ibom State, Bayelsa, Cross River, Delta, Edo, Lagos, Ogun, Ondo, Rivers State. If we go to the continent of Africa and we look at it from North Africa, Algeria, Egypt, Libya, Tunisia, Morocco, coastal countries, just like Nigeria, Ghana, Senegal, Ivory Coast, Benin Republic, Benin Republic, then Sierra Leone. In East Africa, Kenya, Tanzania, Somalia, Mozambique. In Southern Africa, South Africa, Namibia, then the island nations of Madagascar, Seychelles, and Cape Verde. When we look at all these countries having access to coast, that means it should be easier for investors within these states, Africa as a case study, to invest or lay those marine fiber optic cables that you are referring to, and which will serve as a conduit to other landlocked states. In case in point, Nigeria providing such to Niger Republic because it's a landlocked state. What's scaring investors away?
So like I mentioned before, one of the key factors is what?
Insecurity. You mentioned insecurity.
Yes. Because when you look at most African countries today, there are a lot of issues. If you look at Nigeria, for example, I don't know how many investors that are going to North to build, fiber infrastructures. In fact, as at today, there are areas in Nigeria that contractors will not accept to go and work because of what? Insecurity. So one of the key factors is what? Insecurity.
Okay. All right. Okay. Thank you for pointing that out, because I know the way we used to experience insecurity before now has drastically gone down. So if it has drastically gone down, yes, of course. So I was expecting that maybe investors and contractors will take that opportunity to penetrate. But there are investors.
So globally, do you think that insecurity is going down in Nigeria and other neighboring countries?
Oh, no, we just, the thing is, we just need to communicate it to them that, look, insecurity has drastically dropped, so much so that investors can find that as a platform to invest. However, that's not the objective of my question, because I am looking at other countries. We supply most African countries power, yet we cry about power here, but we supply most African countries power. Most of them are not even paying up. So I was expecting the same provision that we've made for other African countries through the direction of the conversation we're having. Apart from insecurity, what other thing do you think is scaring investors away?
Okay, so you also look at funds. Okay. Because it will be a heavy investment For example, for you to run an optical fiber on the terrestrial to Niger, that's a very heavy investment. So if you want to do that, apart from its security, you also look at the market. You also look at the opportunities. You understand? Is the market there? Because anyone that is investing has a lot of factors that he actually need to also put into consideration. However, if our government has developed infrastructure internally within the country, it will be easy for investors to extend the network to the neighboring countries.
Okay.
There's this thing that we are hearing that federal government want to extend fiber infrastructure to every local government.
Yes.
You understand? Nationwide. If we have such infrastructure in place, I bet you expanding our network from Nigeria to neighboring country will be very easy. Because we'll be looking at 10, 20 kilometers, oh, I'm already in another country. And you start expanding from there. But a situation where you don't have that in place, it will be a capital, intensive project for you to start, oh, I want to build fiber from Abuja down to Niger. But if you have fiber presence in Borno, it will be easy for investors to take it from there to an extent to the neighboring countries.
Okay.
So government has a big role to play in developing our telecom infrastructure, both in Nigeria and Africa generally.
All right, so talking about developing our telecoms infrastructure, the demand for skilled engineers is growing. So what key skills are essential for professionals, managing complex telecommunication networks in Africa?
Yeah, so telecommunication is a very vast sector. And in fact, almost every skill plays in telecommunication, whether it is power, whether it is project management, whether even if you are a craftsman, you will also have a place, you understand, to contribute in the telecommunication sector. So we have also the network designers, you understand, that actually design the network, which is the backbone of whatever we are doing on the network, on the telecom sector. Because when you have a good network design, right from scratch, it will make your deployment easy. Also, the maintenance of that network, it will also make it easy as well. So we need people who are skillful in network design. We need people in IP engineering. We also need people, in programming. We also need the software engineers as well into the industries. You understand? Because, we keep having a lot of things, a lot of opportunities, like we have the fintech technology, which is built, you understand, on the telecommunication foundation. So we need software engineers that can actually turn users' requirement, you understand, into technical solutions. So, like I said, power engineers are also required because power is very, very needed. It's one of the key requirements in telecommunication network. So also have the project manager, people who can also guide the engineers, who can also ensure that, project deployment are well managed, you understand. So like I said, virtually all the discipline can have their feet in telecommunication industry. Is it the legal? You understand? The lawyers, we also need the lawyers for projects, for contract, SLA, you understand? They have a role to play in telecommunication industry as well. You also need the media. You understand? People that can showcase what each company is doing out there, and also people that can help to educate the masses. You understand? Available services, the need for, digital skills, and the like. So virtually, it touches every discipline.
All right. So you mentioned power, which is one of the key areas that it's kind of like a bottleneck to quality telecommunications. Recently, there was strike. The gas supply was stalled for a while due to the battle between Nupeng and Dangote and all that. And you hear of telecommunications companies saying they are going into solar, they're going into renewable energy. What do you think could be a lasting solution, to stable power, because that affects telecommunication?
Yeah, so like you said, is one of the key factors that really impact the telecom business. Not just the telecom business, but other businesses in Nigeria. So if you look at the OPEX of telecommunication industry, you see that power is taking up to 70% or more of their OPEX. Unlike what we had before, how much was the cost of diesel per liter?
Yes.
Just like 5 years or 6 years ago. So when you look at 5 years ago and now, the cost of diesel, the cost of money that companies spend, you understand, on fueling up the generators, because every telecom site, you have like 2 generators on site. We have infrastructural companies like IHS that have up to over 20,000 sites nationwide. So when you look at the money they spend on maintaining the generators on site alone, it runs in billions. So that's why there is need to have alternative for power. And currently now, ISPs are looking into solar, having a hybrid power system.
Yes.
Where you have maybe half generator combined with solar, or you have the national grid combined with solars, or when you have the generator, instead of running in diesel, you'll be running on gas.
Yes, gas.
Because since gas is cheaper, in fact, so many people are migrating from diesel to gas. So just to save cost and also ensure network availability. So the way to go in terms of power in telecommunication is hybrid power solution.
Hybrid
power solution. And these days now we have, like the lithium batteries that, many people are going for. Although the cost is not here, but on the long run, I think it has a long-term benefit. So the cost of setting it up might always be a challenge, you understand, to many ISPs, especially, ISPs that are still struggling to stand. But like the big players, when I mention the big players, you should know the people I'm talking about. So some of these projects, it might not be a big deal to them, you understand? But, out there, the market is polarized with competition. So because they are there, they spend less because they make much gain. They can also reduce, you understand, the rate of their services, which when you compare it to the little ISPs that are coming up, it becomes a problem.
Okay. Now, recently, we just finished speaking with a professor for talking about financial inclusion, and technology and technological infrastructure is mentioned as one of the drivers to drive that specific industry. It says Nigeria is the continent of Africa is about 38% when we start talking about telecommunication infrastructure, and the average that is required globally is about 68%. So we are far back. Recently, the telecom giants in the company, by way of policy, in collaboration with the CBN, twisted the government to increase tariffs because they felt there's not been increase in tariff all the while, and that most of their equipment are dilapidated, and that's the reason why they are not giving us efficient service. So we, give or take, in the next 2-3 years, we'll see most of this infrastructure that are coming from outside the country land in the country, and there will be, an upscale for our infrastructure. There'll be an upscale. Where do you see the market heading with the addition of such infrastructure and technology?
Yeah, so thank you for that question. You know that the telecommunication players are businessmen, and if you look at the economy, you will see that we have inflation that affects every transactions, especially that we have in the country. 90% of telecommunications equipment are being imported. And you know what the dollar is saying this time around. So the equipment, maybe you bought $1,000 5 years ago, maybe in Nigeria now, it might be like 400 to 500,000. And today, that same equipment will be giving you 1.5 million, 1.7 million financial value here. You see that the difference is clear. So you can't continue to be given the same cost of service last year to this time around. So like I say, they are all businessmen, everybody's doing
But they have
business
50% increase in tariff, in phone calls, in text messages, in the cost of data in Nigeria. And most of them are multinationals. They don't only do in Nigeria, but in Nigeria they have, this is where even the giants that we are talking about came out and said, oh, what we've not made in Africa for 10 years, we made it in less than a few years just in Nigeria because we have the market. So with the recent increment, we should be expecting some form of difference because they are going to invest in infrastructure. So if you look at the market, do you think, because about $10 trillion, a particular specific platform was saying the telecom industry in Nigeria is worth about $10 trillion, if not more, but we've not really tapped in. And probably that's because of the absence of infrastructure, like you rightly said. So let's assume we are able to meet 50%.
Okay, so even though your question is not too clear to me.
Okay.
Yeah, so when you say we are able to meet,
I'm talking about just 9.
Is this in terms of usage or
in terms of infrastructure?
In terms of infrastructure.
Yes.
Okay, so you know, I've said a lot on this infrastructure before.
No, but I'm looking at the market value.
Yes, so you know, even in Lagos, you do know that there are still areas in Lagos that have poor network coverages.
Yes.
Despite that, they are even close to the sea, and despite that, we have over 200 ISPs here in Lagos, yet there are areas that do not have good network coverages, let alone when we are now moving into the terrestrial regions. So even in Lagos, when network operators are designing their network, they also look at, you know, areas that they have opportunities to get back their investment. So whether there is 50% increase or not, you understand, that business opportunity is always there. Now let me now give you a scenario. I did a project in Iwo. I had a project to do a campus connect in, Iwo. That's in Osun State. So after doing the design, the wireless and the fiber design in the university, we need to connect to internet. And there are ISPs there in Iwo. So when we started requesting who can give us capacity, you understand, to bring up the campus, we were surprised that they told us they cannot give us more than what? 50 Mbps of internet capacity. And that is to tell you that in Osun State, the ISPs are limited in what? In capacity. Why? Because there is no much telecom infrastructure there. And that tells you that they mostly depend on microwave network transmission. Because if they have fiber transmission from Lagos down to Osun State, capacity will not be a problem.
Great.
All right, so finally, what would you recommend right now to assess what areas, let me put it that way, what areas should be prioritized, you know, to accelerate strengthening Africa's telecommunications sector?
So, like I said before, government has a big role to play here. Government has to weigh in to ensure that there is a kind of backbone network. Because when you have backbone network, ISPs can leverage on it to extend service to every region in the country. But in a situation where you don't have a reliable backbone network, it will still be a challenge. If you have an existing backbone, then ISPs can invest little to extend network connectivity to virtually every corners of the country.
What about the private sector?
So
what can it do? Because, I mean, government can't do it all.
government cannot do it all. We also need actually the private sector to collaborate. You understand? Okay, let me give you an instance in Lagos. Lagos State came out with a beautiful, infrastructure concept to do a metro fiber that will cover the whole of Lagos.
Okay.
And that's the objective of that. If Lagos will set it up, ISPs will not have any need going to dig Lagos land again to run fiber. It means that wherever you want to provide service.
Go on a short break right now and we'll be right back.
Augmented reality, AR, is a technology that merges computer-generated images with the user's real-world view, creating a composite experience. This interactive experience integrates various sensory modalities, such as things you can see, hear, and even feel, making the experience interactive and immersive. In recent years, the emergence of this transformative technology has seamlessly integrated digital and physical realms. This groundbreaking innovation relies on specialized hardware like smartphones and smart glasses equipped with cameras and sensors, AR software, and Apple's AR Kit and Google's AR Core. Then creates immersive experiences by overlaying virtual content onto the user's real-world environment. AR software such as Apple's AR Kit and Google's AR Core then creates immersive experiences by overlaying virtual content onto the user's real-world environment. AR's applications span diverse industries from gaming to education, healthcare, retail, and manufacturing. In education, AR enhances learning through interactive and dynamic experiences, while in healthcare, it aids surgical planning and medical training. Retail experiences are transformed as AR enables customers